Yeah, hit record well.
All right, thank you, bro. Thank you for the
Wait,
the
do you wanna
reminder.
give him 5 more minutes or?
And it's okay. People can hop on in here. It's being recorded. So let's start.
Aye.
I told people we were live. So, all right, guys. So what are we talking about? We're talking about fair value gaps. Okay, FVG. And we're going to be talking about market direction. Before we even get into that, we're going to go over some really boring basics. Okay, some pretty boring basics. Let me go ahead and share my screen with you guys. Boom. Can everybody, can we get a thumbs up real quick? Can we all see the beautiful whiteboard on top right here, the screen? Can you get a thumbs up in the chat real quick? Thumbs up in the chat.
Thumbs up, thumbs up. Everybody see it? If you're on the phone, you might have issues.
Bet. Love it. I can't find that. Can't find what?
The thumbs. Having issues, Matthew?
Having anything, what's up? Can't use full screen.
Can't use full screen. Are you guys on mobile devices? Sometimes it's a lot harder. Doesn't let you.
Yeah, make sure you guys are using your.
mobile, yeah.
Yeah.
You have to turn it to the side sometimes.
Look at the interns doing their job. Love it.
Rotate it if you want full screen.
Try sideways.
Yeah.
Sideways. Cool. Try to turn sideways. Let's see if that works, okay? All right. So, let's get started. Let's get started. Again, you guys can, while we're explaining stuff, while we're showing you guys the stuff, you guys can stop, type the questions in. If you guys have questions midway through or wherever, just type the question. I will stop. Or if I'm like on a roll here, Chino or Omar will type and answer those questions if they're basic questions. If they're in-depth questions with the lesson, I'll stop and answer those questions for you. Okay? Awesome. So we're going to go into some pretty basic stuff to get started with, okay? The first thing we're going to get into is, obviously, there's 3 ways the market moves, okay? Chat, team, do we know the 3 ways the market moves? Yes or no? Can we get a comment? Do we know the 3 ways the market moves?
There's 3 types.
Yes, up, down, sideways. Pretty much.
Perfect.
Look at you guys already killing it.
100 points.
Look at you guys. Look, I've taught you guys well. I taught the Padawans well. All right. Up, down, choppy. Pretty much what's been happening this last couple months. Okay. So, number 1, right, is higher highs uptrend bullish. Okay. Buyers are in control. That was not the case today. But pretty much what an uptrend looks like, and you guys obviously see this, higher highs, higher lows. And this is my Picasso drawings. If you guys like it, I'll donate $10 to this drawing. Okay. Number 2, right, is consolidation, sideways, right? Equal highs, equal lows, right? You guys got that, okay? And then number 3, obviously, is what happened today, what we capitalized on, right, is a downtrend, bear market, lower highs, lower lows, okay? Those are the 3 things the market happens, okay? We have to identify when we're in a bull trend, we have to identify when we're in consolidation, and we have to identify when we're in a bear market, okay? That's the first thing we have to do as traders, okay? That's number 1. Number 2, let's do number 1 as an example. What do we need to know before we enter a trade? Do you guys know? Just because we're going higher highs, higher lows, how do we know? Do we just, oh, it's going up, let's just buy? What, do you guys know what we have to do? Let's see, let's get some typers in here. Let you guys' brains. What's the trend? Overall trend. Cool, so we understand the trend. Yeah, so overall trend is bullish, right? But just because we're making higher highs, higher lows, how do we know when to actually identify that? Well, that's where fair value gaps come in. Okay, that's where we know when to enter those positions. Okay, and that's what I'm going to show you today. All right, and we might even, if we roll through fair value gaps, we might even talk about break of structure as well, and how to know when to actually go in on the opposite side. Okay, so for example, and I'll show you guys real examples, but we're doing some Picasso drawings for you guys to just get the basics, and then we can go from there. And by the way, shout out Box. I don't know if those profits that you're posting in the chat are legit, but if you're pulling 40K in 2 days, that's insane.
That's wild.
Brother, you're making more money than I'm making. So 40K, if that's legit, bro, 40K in 2 days, congrats. Congrats. Anyways, continue. So let's say we're in an uptrend, higher highs, higher lows. Well, let's say we're right here, right? We have to identify a fair value gap. What is a fair value gap? It's a 3 candlestick pattern, okay? A 3 candlestick pattern. And I'm going to try to draw it for you guys, and I'll show you a real life example of what a fair value gap looks like for an uptrend, okay? It's a 3 candlestick pattern, so imagine we got a bullish trend, and there's one candle here. I'm going to be drawing these beautiful wicks, right? And the next candle is this big buying candle right here, right? And we got a wick, and we got a wick, and the next candle will be like a small little guy. All right, this is what it looks like. I'll show you guys a real example in a second, but mind the drawing, okay? So we got 3 candlestick pattern. Small little green candle, small little red candle or green candle. Doesn't matter. It can be red or green, guys. It doesn't have to be, oh, 2 reds and a green, 2 greens and a red. It could be whatever color, okay? As long as we're in a uptrend, that's what we have to identify, okay? This is what we want to look for, a 3 candlestick pattern. And you guys can see fair value gap. What does gap mean? It's literally in the name. We have to identify a gap. Since there's a wick here and a wick here, there is a gap in between this candle, okay? And that's where we draw those rectangles that you guys see, and then it goes into the fair value gap, draws the liquidity, and then goes higher, okay? And I want you guys to see, do you guys know what liquidity means? Do you guys know what liquidity means or no? Can I get a W or an L in the chat, or yes or no in the chat? Liquidity. Let's see some typers in here.
Where the money is?
Where the money is, pretty much. Yeah.
Pretty much. Perfect.
Not exactly. No, we don't. Okay, that's fine. That's good. I gotta ask some questions because you don't know what liquidity is. You're not really gonna identify what anything is, right? So liquidity is pretty much where the market moves. Market moves towards liquidity. Liquidity is where the money is, where resting SPY orders or sell orders are located. So for example, right? Here's liquidity. We're trading higher right here, right? We're trading higher, we're trading higher. There's a gap that needs to be filled, right? There's resting orders, an imbalance of buyers and sellers having orders. It could be limit orders, it can be stop loss orders, it doesn't matter, but there's an imbalance in price. Since there's an imbalance in price, price needs to come back down to collect all the liquidity, all those orders before it can come all the way back up. Okay, and again, I'll show you guys a real example except for my beautiful drawings over here, okay? So that is what a fair value gap looks like on the bull side. Number 2, okay? We do not, when markets are trading and consolidating, higher highs, higher lows, what does that mean? Well, equal highs, equal lows. We don't want to, what's it called? Fair value gaps, there's going to be small, little tiny fair value gaps inside of this, but we do not want to trade in consolidation, okay? How do we make sure that we are not in consolidation? Sometimes I get stuck in consolidation. Sometimes I am in a trade, I'm like, damn, I'm in consolidation, let me exit my position, okay? This is sucky, this kills day traders, this kills us, okay? I'll show you what consolidation looks like again in a real example. So, no fair value gap trading in consolidation, okay? I don't know how many X's I drew through that, but a lot. All right, and then the number 3, which was today, and if you guys were on the live power hour trade and we all killed that together and made some crazy money together, right? Number 3, higher lows, or lower lows, lower highs, downtrend. How do we form and how do we know when to enter, right? Well, same exact thing. It's going to be exact same thing, 3 candlestick thing, and it'll look exactly the same, okay? So let me give you guys some examples of some fair value gaps, okay? Let me give you guys some examples. I gotta find one first, team. Okay, here we go. Here we go. I wanna make sure this is one before I lie to you guys about it. Nope, that's not one. Give me a sec. Here we go. Okay. Here's a fair value gap. Right here. So, first thing we identify is trend, okay? What is happening right here, guys? We're making, how does a trend work? We make what, guys? For bullish markets, what happens with price? Come on, type it in there. Let's see if you guys know. What happens with price in a bullish market? Up, yeah, but what happens? What do the lows do and what do the highs do? They make what? Higher highs, higher lows. Boom, Jocelyn, Trader of the Week, answering all these questions. Again, all you guys, Dabdi and Jerome, nice job. Okay, exactly. And I just changed to Netflix for some reason. We don't want Netflix, we want the NASDAQ. Okay, exactly. And you guys can identify, look, here's a low, here's a higher low. Here's a high, here's a higher high. Here's a higher low, higher high. So we obviously identify, cool, we're in what? An uptrend. Sweet. Okay. That's number 2. Now what do we want to do? Let me delete this. Where's the fair value gap? I told you guys what it looks like. It's a 3 candlestick pattern where there's a gap in between the 2 prices. Okay? And you can see right here, here's a gap. And let me draw it for you. Here is the candle before. There's the little line of it. And then the next candle, here's a little line in it, right? And then what's inside of it? The gap is right here. Okay? So how do we draw that? Let's go ahead and draw it. If I can delete this blue line, there we go. Let me get my rectangle tool. Let me delete these small ones. To get the rectangle tool, you just go to the brush tool, push that out, and it says rectangle. And we're going to draw the base of the rectangle, okay, to the high of the previous candle. So here's the big candle, the base, click, and then the other candle, and then extend, okay? And there is your fair value gap. I thought it had to be a 3 consecutive same color candles. Nope, doesn't have to be. Nope, nope, nope. It can be. Doesn't happen to be. If you identify market structure, it's fine. If you just say, oh, because there's so many fair value gaps everywhere, if you don't know market structure, you don't know when market, the next level of resistance, yes, you're just guessing. Okay? But no. Aren't there times when the fair value gap isn't respected? Yes, there is. Well, how do you make sure that that doesn't happen to you? Do you know what time frame fair value gaps are the strongest? Higher time frames, the higher the fair value gap, just like support and resistance. The higher the time frames, the stronger the support and resistance, the stronger the fair value gap. So I'm just using an example in the 1 minute just to show you guys an example. Okay. Are the time, yeah, and fair value gaps are only filled 70% of the time, right? So that's what I'm saying. If you put fair value gaps with support and resistance, with market structure and trends, you don't just trade fair value gaps, guys, and then you're a successful trader. Oh, I understand fair value gaps. I'm a A+ trader. Here comes my 6 figures at the end of the year. No. This is one little tool, one little trinket that you guys have to put in your toolbox to become an overall well profitable trader. Okay? So, obviously, first thing we did, we identified trend. Cool. We can put our support right here. We could even put our what? Our trend line right here. If I can draw this kind of pretty. Okay? Cool. Now, if we zoom out a little bit, we can see we have prior what? Resistance right here. Okay? This is just an example. Imagine like this is where we're higher. Okay? This is just the example. But okay, now I know price is most likely going to go up to here. Okay? We can make, and with one contract, you can make a decent amount of money, maybe $200, $300, $400 off of this play with one NQ contract. Okay? What do? We identify trend. The exponential moving average is another confirmation that we're in a correct trend. Breaks through, comes into the fair value gap. Again, most times fair value gaps, usually I usually base it off the 50% rule. What does that mean? I usually enter my position at the 50% of whatever that fair value gap is. I do not enter at the tip or at the bottom of the fair value gap. I always do 50%. Why? Because my stop loss, if this does go against me, will be right below the fair value gap. So let's just say I go long here, my stop loss will be right here. Okay. And pretty much you guys can see what happens here. We first break these higher highs, and we can have 2 TPs here in this specific example. Okay. First TP will be obviously if we break highs, and the next TP would be at this previous level of resistance. And that's why I taught you guys support and resistance at the very beginning. How many of you guys do not know what support and resistance is real quick? I just want to make sure that who does not know what support and resistance is? Or does every single one of you guys in the chat know what support and resistance is? I want to put yes if you know, put no if you don't know.
Support and resistance.
Tony, you know. Shut up. I'm kidding. I love you, bro.
Yes.
Why can you not just use the pivot points? What do you mean? We can use, I mean, that works too. And again, there is a different, again, these are bullish engulfing flags as well. I mean, these are bull flag patterns as well. So, I mean, there's so many different ways to read the market and so many ways to trade the market. I'm just giving you guys little tools and stuff to be able to put this in your toolbox, and then as a collective, as a strategy, you use this, okay? Already supply what the support resistance is. They do, yeah. But again, if you can do pivot points, or you can do support resistance, or you can do both, okay? It doesn't matter. Okay, as long as you have your risk management, understand the trend of the market, Because as long as you're trading with the trend, and as long as you're entering at smart points, and as long as you're controlling your risk and not over leveraging your position, there's no reason why every single one of you guys should be profitable. Okay? Cool. Let's move on. Let me give you guys another example here. Okay? Let me give you an example on a downtrend overall fair value gap. Okay? So, for example, how do we know when we're going to go lower? How do we know, oh, we're going to go lower? Well, there's a few reasons. Reason number one, we're hitting main level of resistance. Okay, but just because we're hitting resistance doesn't mean that we're going to go down. Sometimes we can hit resistance, retest, and go higher. So how do we know? There's a thing called break of structure, and I'm actually going to get into that in another lesson, but I'll get into it a little bit today. Okay, first thing we want to do, I told you guys this in the beginning of the lesson. What do you need to have? What do the highs and lows have to do for a downtrend to be valid? What do you have? You guys know what an uptrend is, so what is a downtrend? What does it have to be valid? What has to be valid? Is Jose going to be the first to answer? What do we got? Lower lows, lower highs. Beautiful. Okay. Doesn't need to be below the EMA. Give it up. We're going to get to that. Okay. We're going to get to that. So, again, do I use my EMA as my entries and my exits? No. Do I use it as a crutch or as a, hey, this is, these all three things are connecting? Yes, and I'll get into that. So first things first, right? Lower lows, lower highs. That signifies what? A downtrend. So first thing that tells me that we can potentially, again, we don't know, just because it hits resistance doesn't mean we know it's going to sell off, right? We've hit so many levels of resistance. We played resistance breaks when it breaks out of those levels. This can be our first, hey, let's see what happens to the price. That's number one, okay? Number two, we identify a break of structure. And I'm going to get into that in the next lesson, but I'll tell you a little bit of what break of structure is. Break of structure is when the previous high is broken, or the previous low, higher low, is broken. So for example, here is a lower high right here, okay? Doesn't need to be below, okay. Here's a lower high below here, okay? Lower high is broken from this candle right here. So that's indication number two that we can potentially start selling off. All right, not sell off, but change direction. Okay. Next thing that tells me, we are reversing. Just like you said, where are you at? Just like you said, Gary. Was it Gary? No, it was B. Exponential moving average is what? Turning direction. That's another indication. So we're at resistance, lower high broken. Now, what you guys said it before, lower lows, lower highs. Here is a lower high being made. Right here. Here's previous high. Here's a lower high just been made. So now we have like what, 4 confirmations of this potentially moving down. Cool. Now what do? We identify, we have a little bit of support here. We have a little bit of support here. Okay. And now we figure out when do we need to enter the position. And that's where the fair value gap tool comes in. Okay. Where do you guys see the three candlestick pattern or no? Do you guys see it? Yes or no? Or are you guys like, no, I don't see I can't see the candlestick pattern. I need help, Will. Perfect. I think so. Okay, cool. Let me show you. All right. Here we are. Let me get rid of these lines. No need help. All right, right here. And where can you see it, okay? High, low, gap. And at the same time, it's retesting the exponential moving average, okay? So let's draw a rectangle. Again, it's not going to be perfect, but it's whatever. Okay? And you guys can see, retouches the moving average and goes lower. Okay? Let's say this happened too quickly for you and you missed out on this play. Okay? Boom, it happened too fast. Okay, that's fine. There's another way to play this. We obviously identified the trend. Yeah, there's another fair value. There's so many different fair value gaps that you can enter. Let's say here's a bottom, here's a low. We come up, get rejected, breaks a low. Okay, cool. What can we do now? Do you guys know? Excluding fair value gaps, if let's say we can't identify a fair value gap, but we know we're in a downtrend, how can we play this to our advantage? Okay, let's say we slip, we're dropping. Okay, Well, we know that the previous support is over here. So price probably and most likely has to go to liquidity. I told you guys before. Price moves where liquidity is. This has to get filled again. Liquidity has to get filled. So most likely price has to come down here. So we already know that price is most likely going to go down here. Now we have to identify where's the best point for our ROR, our risk rewards to enter. Okay, so we can see right here, buyers step up into this. Okay, and it's another mini fair value gap. Actually, while I'm watching it, I kind of missed it. Is right here. Look, here's another fair value gap, right? Did you guys see that? Let me move it. Candle high, candle low. Price comes into the 50% area. Take a position, stop loss above these highs. Okay. Take profit where? At next level support. We would have made this whole play right here, which would have been kind of gnarly, kind of nasty. Okay. And there you go. Again, yes, most likely we don't hold the position all the way to here. A lot of you guys see a ton of money and freak out. I would have probably exited early as well, honestly. Okay, we don't get the whole pie. We don't get the whole cake. Okay, so I want to show you guys questions before I move on though. Is this kind of making sense? Questions, questions, questions. We just need a few bites, exactly. So basically a fair value gap is when there is a strong volume in a trend that is reflected on one stick that indicates possible position zones. Yeah, you said that very, very scientific, or what is it, wordy, but yeah. Is the red line support or resistance? Yes, that red line that I drew is mini, again, because there's so many different levels of support and resistance in this, right? Here's a level of resistance. Resistance broke. It became support. It broke again. Now it's resistance. So yeah, so this can help with your entries. This can help with your take profits. Okay, cool. Let's give you guys another example. Or does one of you guys want to pull up here and make a fair value gap? Do one of you guys want to identify fair value gaps? Do we want to call out some people?
Looks like Abe raised his hand.
Dabdi, does anybody want to come up here? Do we want volunteers? Or do you want me to just keep going and you guys are scared? It's okay. You guys, I know it's the first time you're probably seeing a fair value gap, so it's okay that you don't want to come in. Do fair value gaps, do you do fair value gaps in the 1 minute? Yeah, so when I actually played, let me find the position, the play that I played. Yeah, was it this play? I'm trying to think here. Yep, it was, no, it wasn't. It was. Yo, do you know what time I played, Chino, do you know what time I played that play on Power Hour? What time was it?
It was 1:40.
1:40, here's 12. 12, I think it was like right here? Yeah.
Might have been, yeah.
Yeah, it was here. Okay. Or was it here? No, it was here. No, yeah, it was here. Okay. Sorry, guys. Okay, if you guys are on today with Power Hour, can you turn on executions? No, I'm not logged into my broker. But I probably could. That's probably a good idea, an easier way to do it. But all right. Perfect example, guys, right? You guys can see what's happening right here. First thing to identify on the trend is what? We're making higher highs, higher lows. Okay? We're making higher highs, lower lows. Or sorry, lower highs, lower lows. I confuse myself sometimes. Lower lows, lower highs, right? So we obviously know we're in a downtrend. And I even told you guys, I'm not going to do anything until something gives it to me. I'm not going to just go in short because I know we're going short. I want to be confident in my position to actually go long in these or short in these. So I waited for what? The support to be broken. When support is broken, what happens? Do you guys know? When support breaks, you guys know this, what happens? You guys know this? You guys know this?
That's funny.
Change of direction. Yes, sir. Falls, it becomes resistance. Exactly. So now, this level of support is now going to act as resistance. Cool. Actually, something happened here. Again, a fair value gap happened here, okay? So I knew we were selling off, and I'm like, I'm just going to wait. I'm going to wait for, there's 3 confirmations that told me to go short on this. We broke support. which means now it's going to act as resistance like you can see. And second thing, exponential moving average is still using this as a resistance level, and we can use the fair value gap to make the play right there. And look what happened, guys. You guys even saw this. Sold off, entered at the 50% zone. I can't speak today. Right there. Stop loss was pretty tight. We almost got stopped out. Right? But my stop loss was right here at previous wick high. Right? I don't put it exactly at the level because exactly would have been stopped out and then we would have missed out on the play. So stop loss was right here. And take profit for me was at these lows. And we got out right here, and we made like $400 off of 1 to 2 contracts. I forgot how many I went in with, and that was the play that we took at like 1:30 with the team. I don't know who. Does anybody here that hopped on with me? Was anybody on the Power Hour session with me, or was that the other team? Like, was that because I know we have like some people that hop in and hop out. Who was on there with us? 1, 2, 3. No, I know you were sleeping. I was on, but I just paper traded. Yeah, but no, you guys were on. So you guys actually saw the literally what I'm teaching you guys happen in real time. Okay, you really saw it happen in real time. Okay, and that's literally what I do. We identify structure. What is structure? We were in a downtrend. We were overall, and then I'll talk about daily bias in another lesson. Okay, but overall structure was bearish, right? I knew we broke structure again. Let's go short. Okay, and then we started what? This is another perfect example to talk to you guys about something, right? Look what the market was doing for the rest of the day. What is this, guys? What is... Let me get my brush up. What is all this? What is consolidation? Exactly. Do we want to trade in this? Yes or no? I mean, technically, if you really, really, really wanted to, if you identified that we're in consolidation and you're like, oh, I got to trade. I don't know why you would. Just take the trades, 1, 2 trades a day, make your money, walk away. Okay? You could, okay, cool. What is consolidation? Consolidation is equal highs, equal lows, which means that we can trade inside the zone. The only negative to that is we don't know when stuff like this happens or stuff like this happens to where you try to say, oh, we're just getting back in the zone. I'm going to go short here. Well, actually what tells you too is you actually made a higher high. We're actually making higher highs here. So actually the channel is kind of changing. So it's harder to have good risk management. It's harder to trade in consolidation zones because, like, okay, maybe you could have went long here, came back, and then sold here, and then came back down, went long here. But again, like it's super hard to trade this, and then it gets become chop, and then we're all over the place. Okay, so we don't like trading that. We want fluid, and that's why I trade the New York session, guys, because usually price gets kind of funky towards the end of the day. Actually, towards like 11 to 1. And that's why I hop back on with you guys at 1:30 because that's power hour. Okay. What's the indicator called for the 200-day moving average? It's called the SMA, simple moving average. Okay, you just go into the indicator tab up here and type in SMA, and it'll be this one here, moving average simple, and make sure it's at the 200-day length. Okay. What questions do you guys have for me? So with man, it's already been, we started at 4:30, right? Yeah. So it's been almost 30 minutes. Cool. What questions do you guys have for me? You guys feel pretty confident? So for tomorrow, you guys can identify some fair value gaps. But what I want to, okay, what's the first thing we do, guys? We're gonna do this together. First thing, what do we do? Very first thing, what do we do? Support and resistance. Yes, but what do we have to identify before we draw our support and resistance? What do we have to identify? Trend, get coffee. Trend direction, identify trends and support. Correct. So you have to identify the trend. Okay. Is it bullish? Is it bearish? Is it consolidating? Once we identify the trend, what's the next thing we do? All right, so for example, we know that we're in a bull market. So let's say this never happened. None of this happened yet. Okay. Actually, I can actually even do that for you guys. Cool. We can go replay. Let's say market. We're right here, right now. We don't know what's going to happen. Like you said, correct. Support and resistance. Let's draw our support. Let's draw our resistance out. All right, so here's support. Here's a little bit of resistance. So far, what? What are we actually in right now before we actually know we're going to rip higher? What are we doing right now? What is this? Consolidation. Yes. Do we do anything right now? No. Right? Exactly. So let's actually play this. I can even show you guys in real time. All right. So we're moving up. We're moving up. Getting closer to breaking out of trend. Wait, let me read. Your last trade today shorted around. What alert did you go long? What alert did you go short? I shorted when I went into the fair value gap, and then when it broke structure on that support. Grayson. So, are we doing anything yet? No. We want to wait for actual movement. We want to wait for this to get out of consolidation. But while I'm waiting, I'm identifying what? We are making what? Higher highs, higher lows. We are making that right now. Okay, you guys can see that. So that's in the back of my mind. Okay, I'm not doing anything yet. Let's continue. All right, waiting. All right, we broke out of trend. When trend breaks, what happens? What happens, guys? When trend breaks, what happens? I never used fibs in my life. I know sometimes it works for some people. You guys can test out fibs. I don't trade fibs. Or pivot points. I don't trade that either. Change direction. Correct. Again, great, Grayson. And guys, there's so many different strategies out there. There's so many. There's Fibonacci retracements. There's pivot points. There's like so much different things to trade. There's so many more ICT concepts that I'm just. This fair value gap strategy is only one ICT strategy out of there's like 15 others. There's displacement. There's daily bias. There's a lot of other stuff. SMTs. Okay. And we can get into that in future lessons. Okay. How do you change direction? How did it change direction? It's going in the same direction. Yeah. When I mean change direction, no, it's not. It's technically all of this is in the same direction, yes. But before this happened, most likely what would have done, right? Oh yeah, I know, but I like pivot points. Okay, Grayson, perfect. Stick with pivot points, brother. If that works for you for 15 years, right? Why change? There's no reason to change. Add maybe what I'm teaching in the toolbox with the pivot points or whatever, right? Okay, so you guys see, you saying, yeah, we're in one fluid direction. I told you, yeah, I'm identifying higher highs, higher lows. But before this actually happened, look what happened every time. Look, these are higher highs, higher lows, technically right here. But we got rejected. These are technically higher highs, higher lows. But what happened? We got rejected. Again, higher highs, higher lows. What happened? Got rejected. So before this broke out, why would we think about going long here? Because most likely out of the last 3 times, we could have gone down. But this told me we're getting out of the channel. Something juicy can start happening. Okay. Let me get out of here. You can always use pivot points, but they're hitting the board. Oh, perfect. Perfect. Most likely it would have hit resistance, came back down, changed direction, meaning it shot up. High volume, correct? And buyers' liquidity was strong, volume was strong, pushed out of the channel. Okay. Now we got something. We got a few things actually, right? First thing that we identified, right? We're potentially out of this channel, which we like. We don't want to be stuck in this. Second thing we've identified, resistance broke. Now this should act as support. Sweet. Now let's continue. Let's identify what? A fair value gap and continuation. Now I want to see continuation of higher highs, higher lows being formed. And you can see, all right, look, it's coming back down. Look at this. It's coming back down to retest this level. And I actually missed something as well. Look at this. So, there's so much to look at, and I'm literally like, this is amazing. A fair value gap was formed on this. You can see previous high, previous low. Okay, let's see what happens. Look at that. Okay, for this example, look what happened right here, right? This example is perfect. That's why my win rate is only 70-30. This could have been a winner or a loser depending upon how you went with it. We could have gone long, went into the fair value gap, went long, stop loss below these lows. We could have gone out at previous highs right here, right? And then I told you before, we have to identify what? There is a potential resistance right here, actually never hit, right? So we would have actually, potentially, there's 2 things that could happen. We could have took our profit, walked away, made money on this trade, or held, done a break-even stop, and been stopped out break-even for this trade as well. You guys can see, sometimes the plays don't go fully in our direction, even when we identify stuff, even when stuff happens, okay? And let's continue. All right, we actually go all the way back into what? Consolidation. Nothing to do, nothing to do, nothing to do. Waiting, 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 waiting. All right, look at this. Look at this. What happened here? Break of structure again, okay? Now this should act as what? Resistance. Okay. And what else? Another fair value gap was formed. And this was, what time is this? Yeah, and this was the trade I took with you guys. Right? Boom. And it would have hit because take profit would have been right here. Okay. So here's two plays. Play A, we would have hit because I usually get out and take my money. I don't try to hold 1,000%. I usually just get out at next high or main next level of resistance, right? And as well, I wouldn't have tried to trade any of this because we were still in an overall consolidation period. Okay, I wouldn't have tried to go. I mean, was there any fair value gaps here? No, not really. I mean, yeah, right here's one, but again, I wouldn't feel confident in that just because what happened here, here, and here. Okay, so here would have been 1.8. I actually didn't trade. Actually, I don't know if I traded this or not. But I know I caught it this with you guys, and you guys can see. Let's say we missed this play. Well, we could have played this. We could have played this, but I waited for this. So there's so many different ways to trade, guys. There's so many different opportunities. I might have picked this one to use. I might have picked here. You guys could have picked here. There's so many other opportunities to make money in all of this. But how I've been successful and how I've consistently made money every single day, week, year, month, or whatever, is sticking to my strategy, being confident. If I'm not confident making a trade, I'm going to walk away. Look, you guys can be like, Will, I am super confident in entering here. Why? You guys could have told me 5 reasons why you're confident in getting in here. I might not have seen that, or I might not have been confident. But if you're confident with your risk to reward, if you're confident where your stop loss is, and you have a game plan, you need to have a game plan every single time you enter a trade. If you don't have a game plan every single time you enter a trade, that is shame on you. That's going to set you guys up not for success but for failure. Okay. The high volume indicator is you can help, but usually if the other candle or candles move, yep. Do you like E-Trade for futures? Never used E-Trade. If you use it and it works for you, use it. I use Tradevate and I use prop firms. I know TradeStation is a good one as well. I know TD Ameritrade and Webull have them, but their margins are kind of ridiculous. But do your homework and just do your homework. E-Trade futures, and then look at the reviews. Do your little bit of background research on them, right? All right, what else we got? CQG is the best platform. I mean, I've never even heard of them. I can do research. If it works for you, use it. Okay. Another example. Cool. Let's give another example. I got you. Like, what number do you consider high volume? I know what you mean. I don't even look at a volume indicator. I don't know what, Jerome, you said you use a program. I mean, what program do you use? I'm not even interested. I might even learn something. Who knows? All right, you guys want another example? Cool, let's find another example. Perfect, found another example. Do you guys see the example I'm about to point out? Do you guys see the example I'm about to point out or no?
I think it's the volume indicator that I showed you last time. It could be. Was
it? Okay. All right, cool. Let's do this. Remember, guys? This was this morning. Remember? We sold off, bought all the way back up, sold back off, then came all the way back up. And then slowly, remember this? I don't know if you guys were on this morning. How terrible this was. Right? Why? I mean, it's very interesting. This last couple of months, like, we chop for 30 minutes and then we actually get a direction after the 30 minutes. It's pretty funny. Okay? So, what do we mark out? What's the first thing we do? We identify what? Trend. Okay? Well, when I first took these plays right here, short, right? Identified the trend, and that's why I kept shorting and shorting and shorting and making money on this. And then we finally hit. We were just in what? Chop. We had direction. Direction was still here. We were just in chop. There's nothing I can do about chop. We sometimes get chop as traders. Okay? But what is right here? Broke trend. Okay? We broke trend. And there's actually multiple fair value gaps hitting on here. Okay? When trend breaks, what's the first thing? You guys know this. Support turns into resistance. Awesome. Okay, we can even draw a low. So for this example, and did I trade this example? I think I did. Yeah, I did. It's actually in my recordings on my YouTube page. I traded this. If you guys want to watch the actual live recording of me doing this. Okay, you guys see, we broke trend. Fair value gap formed. Do you guys see the fair value gap? We're still in lower lows, lower highs, so we understand market structure. You already understand the direction. Lower, 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 high. Low wick, high wick, pull. Okay, there you go. There's that move. Went into a fair value gap. Gap been filled. Take a short. I would have taken the 50%. I would have been red for a little bit. Stop loss below these lows. We would have smacked TP. There's another example. Another example for today. We got another fair value gap. Let me actually make sure I'm seeing this right sometimes. Okay, no, this is not a fair value gap. Why? Do you guys know why this is not a fair value gap? Do you guys know why this right here would not be considered one? Yeah, we have a 1, 2, 3 price movement. But because if I zoom in here, let me zoom all the way in here, we can see there is no gap. The wicks already closed the gap. There is no gap. This doesn't count. Even though if you technically would have drawn it, you would have been successful in that move to the downside, but that is just a once in a blue moon type of thing. Okay? You want to be consistent. Just because you did it this time doesn't mean it will happen every single time. No, because that's not the right way of doing it. Okay? And then we made it and then we continued. So that's one move that I made, recorded. Let's see if we can find another example. See, I'm actually trying to find these while I'm doing this with you guys. All right, so, I mean, there's going to be small ones everywhere, but you guys want to find the main ones. Like, here's one right here. I believe, oh, no, that's not even one right there. And then this is, okay, perfect example. Watch this. Here's a fair value gap right here. Let me show you. Give me my rectangle tool. Here is a fair value gap. Wait, I had it. I think it was, no, because that wick knocks it out. It was somewhere around here, but I want to show you, just because there's a fair value gap right here, what is this? Consolidation. This was before market open. We don't like trading this. Okay? So even though there's a fair value gap, let's say you entered, we would have just been equal lows, equal highs. When they're in equal lows, equal highs, most likely will be chopping around or at break even. We don't want to trade consolidation. And that's why I'm trying to say we like when markets are open, because there is less consolidation. Usually, actually, what I'm realizing, the first 15 to 30 minutes of market open, we get crap. Probably tomorrow will probably be first 15 to 30 minutes. We're going to have another choppy chop until we actually move down. Tomorrow, I honestly think we have, let me look at a bigger time frame before I tell you guys. What is bigger time frame here? Let's move over. Yeah. All right, look what today did. Here's the sell-off today, okay? Where are we? We're at support. If this breaks, this is going to be our game plan for tomorrow. If 21,433 breaks, what are we going to do? Do you guys know what? Same exact thing. We break support. Now it turns into resistance. We look for a fair value gap. We put our stop loss in. We identify direction. And we get out of the next low. And boom. And we do that 1 to 2 times a day. I mean, if you try to do this 30 times in one day, you're going to see how fast your statistics are going to go against you. But if you do this 1 to 2 times a day, make your money. If it's $30 or $300 or whatever the number is, I don't want you guys to get into this and be like, I want to make $400 today. No, forget about the money. Remember the concept. If the game plan only gives you $200, do not hold longer if the game plan is not there. If that plan that we have in attack, you're trying to find a $500 play but it only gives you $300, no reason to hold that to get the $500 because it's not going to give it to you. Okay? So plan of attack tomorrow. I want to see buyers come up into this. I want to actually see, because markets open here in the next, actually I think markets are open. Markets are open, right? It's 5 o'clock. Yeah, markets are open. Oh, it's because I'm in the replay still. I'm still in replay mode. No, I'm not. All right, yep, markets are open right now. But do we trade? No. What are we doing right now, guys? We're consolidating. Okay. Equal lows, equal highs. Cool. Tony, are you trading right now, bro? What are you doing? What are you doing, Tony? You kill me. You kill me. You've been part of a team for like 2 months now and you're still breaking the rules. Anyways. I know, but Tony loves, I think Tony and I don't know if you guys know, but Tony's actually in my area. We might hit up the casino together. If you guys are in the Dallas, Fort Worth area, we can do a meet and greet. Okay. Other than that, questions, guys, comments, concerns. We got about what 20 minutes, but we can end it early. Again, we're going to talk tomorrow. We're going to talk about more identifies and break a structure. Actually, what are we going to talk about in the next lesson? We're going to be talking about. Let me pull up the lesson calendar here. So we talked about fair value gaps today. Yep, break a structure. So Tuesday is going to be break a structure. Wednesday is manipulation and displacement. And then Thursday is liquidity and daily bias. And then on Friday, everything that I'm teaching you guys, I'm really going to show you how we put all that together and identify our play. And I kind of showed you some examples today. Okay. Just lost 102. Why are you guys trading right now? Why are you guys trading right now? Other than that, again, I hope you guys, that helped.